Hello, I'm Marshall Barris with Inside the Deal AZ, the CEO of the House Hunters team here at my home group in Arizona. I'm here with my good friend today. How are you doing?
I'm doing great.
And you want to introduce yourself for everybody out there?
Sure. Michael Freeman with CrossCountry Mortgage. I'm a branch manager of our Scottsdale Kierland office. Been in the business for about 25 years, if you can believe that.
That's a quick minute. You've been through some stuff,
I
huh?
have. Been doing this a while.
So we were talking about that, about what's going on in the market and stuff like that. It's one of the things that, I've only been in the market here in Arizona about 10 years, and it's been a tough grind the past, 2 or 3 years, but we're still here, right? We're still doing it. So what can you tell us about that market?
I mean, we're still here. We're still seeing transactions being done on a monthly basis.
Yeah.
As I was telling you earlier, there's two things I'm really focusing on with all my realtor partner teams and clients out there, and that right now everything comes down to lead generation. Where's it coming from?
Absolutely.
And motivation. And by motivation, I mean, we know the market's slower than we would all like. It's a little tougher than maybe what we were used to a few years ago. And so one of the biggest challenges people face every day is when you're not getting those results that you're used to getting for the work you're putting in. You just got to have the discipline and the drive to get up and still do what you're supposed to do every day.
Yeah. Yeah.
Right?
It's definitely a grind. Lead generation, going back to the building blocks of real estate is really what I've found is the key for us. And every time we start to see a decline in income, because this is what I do for a living, right? So I can definitely see that I'm not doing what I need to be doing as a real estate agent and as a realtor. Got to be doing that lead generation, having follow up, and being out there in the public.
Consistency, discipline every day.
Yeah. So what about these rates? Are they going to get any easier for us or what? Nobody has a crystal ball.
Right.
Crystal ball.
No one has a
right?
crystal ball.
Yeah.
I would say in kind of talking what we're talking about, so much of our job is education right now, right?
Yeah.
Is sitting down with our clients, and because clients right now are facing two challenges. They're facing affordability and they're facing confidence issues in the market of itself, right?
Right.
And so our job is to arm our clients with as much information and data that we can so that they can make the best decisions possible, right?
Absolutely. Absolutely.
And so there's just no deals falling from trees anymore where that's not the part of the conversation and part of the process isn't education.
Yeah.
Right? And so I get asked that question a ton. What are rates going to do? The reality is the days of being able to predict are getting fewer and fewer than we had in the past. You used to be able to watch the charts and the economic reports that are coming out and go, all right, with jobs reports coming out, we know what's going to happen.
Right.
This is the CPI reports coming out. We're not there anymore. Things are just moving all over the place, and we've become almost we're in the middle of politics as well now, our industry, unfortunately.
Absolutely.
Right. And so when you look at what's going through till the end of the year, do I think much is going to change? I don't.
Yeah.
The Fed is still thinking they're going to do at least one drop, but that Fed funds rate doesn't necessarily go straight to mortgage rates, right? Just because they dropped that doesn't mean the last time they did it, mortgage rates actually went up a little bit.
Yeah.
Right.
They did. That's true.
They did. So in order for mortgage rates to actually come down, a couple of things are going to happen. We're going to have some changes, some real changes in inflation. Right. And that's not happening right now. The CPI number that just came out actually here recently, the number that was replaced from the year before, because it's always a year over year number, didn't help us. So we saw rates go up a little bit. And so until we get to where they feel like they have inflation under control, right, we're not going to see a significant improvement in rates. That's got to come first. Obviously, it's part of that's going to help if the Fed starts reducing that rate,
right,
and starts increasing liquidity in the market, that kind of thing that can have a positive impact. But there's those bond traders just don't have confidence in what's going on right now when they don't know what the long-term results are of tariffs.
Absolutely. Yeah.
They don't know what the Fed moves are going to do. So the only thing I honestly see coming that I think will have a positive impact on rates first quarter of next year. So the Fed just said they are open to changing the capital requirement for banks. Okay. And that's the amount of money that they have to keep in reserve based on what they have lent out. Right. That number for years, a lot of the people in that space have said that it's too high. If it came down, we'd be able to do a little bit better in the economy.
Right.
And so the Fed just actually came out and said that's something they want to do. It takes a couple of quarters to actually put that into play.
Mm-hmm.
But most of the economists that I subscribe to and follow do predict that having a fairly significant impact on interest rates.
Mm-hmm.
So the soonest I see us having anything that a big move possible coming
Right.
would be first quarter of next year.
Okay.
Sorry, long way to answer that.
No, that's exactly what we wanted to hear. A lot of times, some people say, well, you don't know, and, no one's going to hold you to, because it's all just opinion.
It
And
is.
it's best guessed on what we do. And this is what we do for a living, right? So it's a good educated guess, and we appreciate you for that information. So what strategies are working?
What strategies are working is focusing on those that do have motivation right now, right?
Mm-hmm.
Those would be your people that are relocating.
Mm-hmm.
Those people have to do something, right? The big segment of the market that we've lost is people that move just to move or move just to upgrade a little bit, that kind of thing.
Right.
That's not there right now. The segment of the market that is purchasing are people that are relocating, people that have major life events, such as having children,
Mm-hmm.
getting newly married, maybe, or downsizing, things like that.
Yeah.
You have to find where the motivation is.
Yeah.
It's not going to be what we were used to in the past. And so I've looked for different segments of the market that I can impact. Are you familiar with non-QM products?
Yeah. So explain, what is non-QM?
Okay. So non-QM is the fastest growing segment of the mortgage loan industry, right?
And it stands for non-qualifying mortgage, right?
Non-qualified mortgage. So years ago, when we went through the mortgage crash, when we started to have some government oversight,
Right.
they came in and put a set of guidelines, let's call it, in place for QN mortgages. And basically what that did is they put a set of guidelines in place of what lenders have to do to reasonably underwrite and make sure someone could afford their loan.
Okay.
Right?
Yeah.
Because when we go, and we'll get into this a little bit about, I keep getting asked that question, are we going to have another crash? So I'll answer that after. But they came in with these guidelines and said, okay, you as a lender have to go in and check these certain things and make sure these are happening, or otherwise, if that loan goes bad, you own it, basically, right? Well, then after the dust settled, now they've allowed this segment of loans to come out that are called non-QM, non-qualified mortgage, where it basically allows for extended guidelines. These are your bank statement loans, 1099 loans, debt service coverage ratio loans, and asset qualifier loans.
Okay.
And it just gives the lenders out there the ability to do loans that don't fit into those government oversight agencies, the Fannie, Freddie, FHA, and VA.
Okay. Opening it up a little bit.
Opening it up. And so CrossCountry, my company where I'm at, we're the largest non-QM lender in the country. So that's that helps because we're trained very heavily on this. But what I've seen is that segment grows as we start to get closer and closer to that being, CrossCountry, again, we're the largest retail lender in the country, and non-QM is almost 40% of our monthly closings right now. That's huge, right?
It is huge.
And so what I've started to do is go out and say, okay, how can I educate my clients, my borrowers, my buyers, my realtor partners to whenever, because every day somebody gets told no by a bank.
Yes.
Right? And that's because that bank's guidelines are very tight.
Right.
Where I can take a look at it in the non-QM space and say, hey, look, I can actually make this work. So we do what I call bailout loans every month. That's a big portion of the loans that my team does is we take a loan that was been declined by one or two other banks and say, yeah, give it to us and we can get it done. It's using those non-QM guidelines. Non-QM also serves the self-employed community, just like you. You're self-employed, right?
Yeah.
And so when you look at the bank statement loan product, well, in years past, before the bank statement loan programs, when you look at your typical self-employed person, they're probably taking advantage of every tax break that they can, rightfully so, right, as they should. And so they've got a number of revenue that actually comes in, but then after they write off what they can, you've got what's called your adjusted gross income. And in traditional mortgage products, that's what we base our qualification off of.
Okay.
And so I'll give you a perfect example. That it's very typical to have someone that is making $250,000 a year, but after the miracle of tax preparation,
right,
they're claiming $125,000, right?
Right.
Well, as we all know, with where values and things are, you don't necessarily, if they're wanting to buy $1 million home, they might not qualify.
Right.
So that bank statement loan allows them to come in and we base it off of your business deposits over a 12 to 24 month period.
So hold on. So they just need their bank statements?
They just need their bank statements. We don't use tax returns.
Really?
Yes, sir.
Okay, that's great. Good to know.
Yeah. So you hand me your tax returns for the last 12 or 24 months, whichever better suits us for the number. We add up all your deposits, your
Uh-huh.
actual business deposits, and then we apply an expense ratio to that, and that becomes my income number. Now,
And in essence, that's what it is for us. I mean, that's what we got to use, you know.
that's
So
what I use. It's a much higher number, right, of qualifying.
right.
The only pushback you might have from someone is those products do come at a higher interest rate
Mm-hmm.
than your subsidized loans, your Fannie, Freddie, FHA, VA. But when I do the math for someone and show them, and I say, okay, let's say if you were able to qualify for this loan and you went out and claimed you're at 125 is what you're claiming, and you'd have to claim that 250 in order to qualify. Well, you go out and claim an extra, what is that, 100,000 in income.
Mm-hmm.
30,000 of that ish is going to go to taxes, right?
Yeah.
Where if you do the bank statement loan, sure, we maybe have a $500-600 a month higher payment. Annualize that out. Let's call it $600. You can either pay $7,200 a year until we can refi as rates hopefully do start to come down, or go pay $30,000 up front. The math works better on the bank statement loan.
That's good.
So we're serving the self-employed community heavily on that.
Mm-hmm.
That's probably my number one non-QM product. My number two is our asset qualifier. And this is a huge one because this is, again, something I can do that no one else can. Our non-QM asset qualifier program allows me to use your checking, savings, crypto account, retirement funds, 401k, everything you've got, and apply a income number to that.
Is that right? You said crypto also, so they're now weighing in crypto into your assets. That's good.
Yep, as long as it's in an approved wallet, right? It can't be on your thumb drive, unfortunately, right? It's got to be an actual approved.
Well, there's
exchange.
a lot of vetted platforms that are probably used.
So as long as it's on one of those platforms, I can take that and apply a fairly aggressive income number to that. I'll give you an example. We're doing one right now where the client has income, they've got a W-2, but they don't qualify for what they want to qualify for. They're okay with the higher payment than what they qualify for because they've got some, let's call it side hustle income coming in from other places, but I can't use it as income. Well, I can take those assets, and with that $1 million, I'm giving them an additional $8,300 a month in income.
Okay.
Super aggressive number. There's other asset qualifier programs out there, just not with this aggressive of a calculation that we allow for.
Okay, so shout out to all those XRP holders, right?
Yeah.
As soon as they hit it, they're looking to see if their bags are going to start going up because of, I think, some legislation or something's going to go through and stuff. So we'll see how that works out for them. But they should be hitting us up then, right?
Right.
Yeah.
So that's what I'm focusing on. I'm focusing on finding those areas where I can educate and maybe take people that didn't think they could buy right now or were told they couldn't, and come in and turn those into home buyers.
Now, so those are the two. You mentioned two methods. Do you have other non-QM methods or?
So there's also the debt service coverage ratio. Primarily, that's for your investors. Those are a little tougher right now because the property does have to cash flow. There's higher debt to income programs in that, where when you look at, let's say, your traditional jumbo program, most jumbo banks have a hard stop at a 45% debt to income ratio. Here and there might be some that'll allow for a little higher. That's normally a hard stop. My non-QM jumbo program goes to 55.
Oh.
And I can get exceptions up to 60.
Okay.
And so it's just an expanded program. You're
giving them more buying power.
You're giving them more buying power, right? We always want to make sure we're doing the right things when we're doing that kind of stuff. We're having those conversations with the client, like, let's make sure there's a reason banks have qualifying limits in place. So we want to make sure that you're comfortable, and we know you're comfortable with the payment moving forward. But if you are, typically I can get someone approved for a higher amount than other banks or other lenders.
Okay. Now, when someone comes to you, if someone comes to you and says, "Hey, I want to, apply for a home," what should they expect? What's the process like?
We make that as simple as possible. I mean, we really play to the level of our client. Some clients love technology and just want a link to fill out and upload. Some clients don't want to do anything like that. They want to email their stuff over in an encrypted method, and then we fill out the application for them. Some people want to come in the office and sit down and talk. Okay. Really, we tailor our process to the client and what their comfortability is.
That's good. I believe also, sorry to cut you off,
no, you're fine.
It's one of those things where I believe there's a chair for every butt, right? There's always going to be something that suits everybody, and you just have to be able to facilitate it. So it's good to know that you guys roll the red carpet out.
We do. We want to make everybody comfortable and do it to their level. So obviously what I like to call it is we do a discovery call. That's where we start. That's where we're
Mhm.
finding out what you're comfortable with, how you want to do things, a little bit more about you, your family, your goals,
Mhm.
your in terms of real estate, what you're looking to do. That's our discovery process.
Right.
Then there's the application process where we start to
Okay.
gather data and documentation so that we can take a look at what you're doing and make sure that we're providing you with those options and other programs and things like that that are out there that might be that are the best fit for you.
Mhm.
Then now we're in the pre-approval process or the pre-qualification process. Then we take it a step further and actually send it to an underwriter to go through everything so we get a true approval. That's
Okay.
called a TBD, to be determined approval, where the underwriter says, yep, I've looked at everything, you're great, now just show me a contract and acceptable appraisal and title,
So a
and we can
property.
close. Yep.
Identify a property. Okay.
Yep. So we do that because of all of the options that unlocks once we've done that. That allows you now as the realtor to get aggressive in close of escrow dates,
Yes.
right? If you got to go out there and win a deal and it's the difference between a 30-day close and a 15-day close, when I've got that TBD approval, you can write a 15-day close all day.
All
right? You can
right.
write a 12-day close if you want. It also allows you to start getting creative with inspection periods, appraisal contingencies, all of those types of things. So we really push hard to get those TBD approvals done quickly because it just gives our clients better buying power and ability to compete if they
Right.
are in a competitive situation. Because it's funny. We all know it's a buyer's market right
It
now,
is
right?
a buyer's
It's a
market.
buyer's
Yeah.
market. But how often have you, and I know you personally and as a team leader get this, every week I get a client that calls and says, well, get this. We've been looking for 3 months. We found a property they loved. It's been on the market for 94 days. We went and saw it. They love it. I called the listing agent and they're getting 3 offers today.
Yep. Absolutely. It's like the same properties are getting
Every
hammered
time.
with offers.
Every time.
And I don't know what it is, but I definitely have seen that myself with our team. So
It is. There's something about that. And so whenever you're in that competitive situation, maybe you're
Mhm.
competing against a cash offer.
Yeah.
Maybe you're competing against other finance offers. I want to give my clients the biggest competitive advantage I can for them to win. And a lot of times, you know, a lot of times we see cash offers win. Why do cash offers win?
Yeah.
2 things.
Cash is king. No, go ahead.
Less contingencies,
Right.
and they're faster, right?
Uh-huh. Absolutely.
So if I've taken it through that TBD process, we can now remove contingencies, right? We can shorten inspection periods. We can
Right.
shorten close of escrows. We can make earnest deposit go hard after inspection because we know this loan's getting done.
Yeah, because still cash offers sometimes they take 10 to 15 days to close. It's still the same time frame.
And they're typically less, right? If you're offering
Yeah.
cash, you want a better deal.
Yep.
Right?
Absolutely.
So that's our biggest goal is to basically, I mean, it's the old cliche, control what you can control.
Yeah.
I'm trying to control what I can control, man. I'm trying to do everything I can to go and win every deal that I can for my clients.
So, and what else do you have?
One thing I think we talked about with clients, it's about motivation right now, right?
Right.
And one thing that I've seen in the market now, it's crazy. If you go back a year ago, do you remember how every lender and realtor out there was talking about buy downs?
Yes.
But we weren't using them,
Yeah.
right? Now, fast forward to today, I was looking at my pipeline that we're closing this month with my team production manager.
Yeah.
Out of the 11 purchases that we're going to close this month,
Right.
all 11 have seller concessions. First time I've ever seen that in my career. So,
Really?
yep. So buyers, it's a great time to buy when that many properties are having seller concessions.
Yeah.
But also on 8 of them are using a buy down mechanism. It's
Okay.
actually a very in-use product right now. And so I think every buyer and agent should be educated in the buy down process right now, because the only argument to that is that the client, their other thing is, well, I just want to wait for rates to come down.
Right.
Right. So I got a great little example for you here. If right now you've got a house and your loan's going to be 500,000 and your rate is 6.5%,
Uh-huh.
that monthly payment is going to be $3,100 and some change.
Okay.
Now, if interest rates come down, and do you know what the statistics say? For every 1% rates come down, creates about 5 million buyers sitting on the sidelines in the market.
Right. Okay.
So let's just say rates only come down 0.5%, and now we're at the 6% range. Well, if they do, we know supply and demand kicks in. And
Right.
there's a lot of unlocked buyers that are the market. We've seen it is when rates come down, the market picks up. So that same house, it's reasonable to think, let's say I wait a year.
Mhm.
Now I'm going to get a rate of 6%. My loan's probably going to be 550 now.
Yeah.
Right? So now it's 50,000 higher. Well, if you take a $550,000 loan at 6%, 0.5% lower rate, that payment is now $3,200 and I think $90 and some change.
Okay, so it's definitely higher.
It's higher. So it's getting people to understand that the purchase price has just as big an impact, if not more, on your overall monthly payment than the rate does.
Yeah.
So I hate jumping on the bandwagon of the marry the house, date the rate, but there's some truth to that.
Absolutely.
In that when we go back on that run, we saw it the last time we had a run on rates. It's going to increase demand. It's going to push up values, and you're going to wind up probably with a higher payment than if you just made the decision now. And you're definitely not going to have seller concessions.
I think it's Gary Keller says that real estate changes slowly and then all at once.
Yes.
And that's what I've seen the market do. And it's been slowly changing for quite some time. So when it flips, we're poised and we're ready with our team to get out there and start showing homes, because I am still in contact with a lot of my database, a lot of my friends, and they are all on the sidelines waiting. And I think what's different is they've seen it happen before, and they're not going to want to miss the opportunity. So they're going to definitely move forward as quickly as possible when that time comes. Now, going back to what you say with the buy downs, we happen to have the closing with you this month. And that's exactly what we did. We were able to get about 5% in concessions that went directly to the buy down. And my clients are absolutely ecstatic with everything that you guys have provided for them with their loan servicing. So, yeah. Well, I appreciate you being here with us today, Mike. If someone wants to get a hold of you, where do they reach out to you? What's your preferred method of contact?
Really, call me on my cell phone. Cell phone is 480-233-3330. You can find us online at teamfreemanhomeloans.com. It's the Freeman team with CrossCountry Mortgage.
Okay.